Hey guys, what's up? This is Andrew for TRENDLINES.com. So in this video, I would like to talk about something a little bit different from what I'm usually talking about. I remind you guys that I live in Hong Kong and everybody is talking about one thing today. Should we buy Alibaba? So let's get into it. And guys, so in this video, I want to talk about the Chinese tech companies. So I'm going to focus on Alibaba because it's listed on the US market. I'm also going to have a look at Tencent and at the HSCI, which is the Chinese index listed in Hong Kong. So let's start with Alibaba. So basically, I have a lot of my friends that are involved in this trade. So let's do some technical analysis here. I'm also going to talk a little bit about fundamentals. My point here is just to give my humble opinion about where this might be going. And I think I have a quite good answer to give. So let's have a look at Alibaba chart. So I'm checking Baba US. So it is the one listed in the US. The one listed in Hong Kong is dropping today. So we might see a lower level here today as well. And if I do the analysis since 2015, I see that we have completed a 5 waves move up, right? We went to 320. Since then, we are correcting heavily, guys, very heavily. The signal of the deeper correction arrived here, guys, when we broke this trend line that was broken, retested once, retested twice. You can see here we had this double reaction as we often have after this kind of breakout, and we got rejected at 230. So now the question we're having is it a good level to buy? So right now we're trading around 135. So to answer that question, let's first check where are the support levels on this chart. And one very natural, obvious support level is 130. Why? Because it's the bottom of the fourth wave. You guys know that whenever we break a 5 waves pattern on the downside, we usually correct to the top of the third, which was our first support level here. It held pretty well during August, and then we broke it. So we go to the next support level, which is the bottom of the fourth wave. In terms of retracement, how much have we retraced compared to the first move? It's a lot, guys. All right, we are below the 61.8%, so it's heavily retracing. It's oversold for sure here. So I think that buying the dip here is a nice opportunity. This is what we are trying to do in our live trading portfolio on Discord. If you're not following us, follow us right now. Link in the description of this video. You're gonna find me and Gabriel, who is an experienced trader located in Panama that is working with me, and we are sharing with you guys a lot of great content analysis, and we are showing you what we are doing. So we're probably going to get into this one. Once again, my level is around 130. Let's quickly have a look at what is the price earning ratio on Baba, because we can compare Alibaba to Amazon, right? And let me show you something, guys. Okay, so I'm going to go quickly on Bloomberg. All right. So first, I am here on Amazon and I check the estimated price earning ratio, which is around 61. All right. And we can compare Alibaba to this because they are doing roughly the same thing. I know that Amazon is getting much of its profits through data storage. That's true. But Alibaba is actually doing the same, guys. All right. So this is the same kind of industry. So I'm not saying it should be the same price earning ratio, but it's just an indication. It's showing us. So here we have an estimated price earning ratio of 15, guys. So it's extremely low. It's 4 times lower than Amazon. So just in terms of price earning ratio, we have a 3% move up that might come, and this would only make them equal. So I think that in terms of fundamentals, this is looking pretty good. So why is it dropping that heavily? We need to ask ourselves. And the reason behind, I don't think it's really related to Alibaba. I mean, of course, it is, but not only. Look at the HSCI, guys. The whole Chinese market is diving. So I'm here looking at the HSCI for the past 10 years, guys. So you can see this market is very rangy. Nothing much happened. We are coming close to the lows of the COVID crisis, guys. The HSCI dropped to 8,300. We are retesting this level. It's totally crazy when, you know, the S&P 500 is still far above the level it had before the COVID crisis. The HSCI is close to the level at the lows during this crisis. So it's extremely low. Once again, the reason behind that is by, you guys know about the Evergrande issue. They might default. People talk about that again today. It's not the only reason. I think that people just fear the Chinese market because of the trade war that started with Trump. We know also that the Chinese government, they don't think short term, you know, they have a long-term view. Xi Jinping is going to be here for maybe another 50 years, guys. So this guy, even if he's old, he has time, you know, so they're not injecting money heavily in the economic system just as the United States and the rest of the world is doing. So I think that they might maybe win the long-term game, but in the short term, of course, it's not the best thing. And the Chinese government, they don't care about losing some of their maybe big companies, you know, they can handle that. They work in a way that this kind of situations can be handled very well, which is not the case in the United States, where it would create, you know, a domino effect with the other companies. In China, they control what is happening. So this is, I think, the reason why investors are scared. And I think we are close to the bottom here. On the HSCI, if we break 8,500, we might quickly go to the 7,500 level, and then we'll probably come back. So I think that buying the dip makes sense on this very good potential stocks like Alibaba. Let's quickly have a look at Tencent, guys. Look, so here I'm going to do the same type of analysis, and you can see that we have this trend line that is holding since 2019. All right, it's holding well. I see a fifth wave to come. So once again, either you guys try to buy the dip here around 440, 400. All right, that's a good level. Or, you know, the different way of trading is not to buy the dip, but to buy the breakout. So you wait for a breakout, you wait for a retest, and you enter in this area, so around 500. And this would be more secure. You just enter whenever it starts to move higher. So this is also something that you guys can do on Alibaba. If you don't want to buy the dip, there is this trend line that is coming just here, guys, the blue trend line that bam, you know, around 170. So I think that if we trade above that, it would look good, and it would probably happen around the 150, 160 level. So you have two different types of trading. I personally gonna try to buy the dip here because I believe in the company fundamentals. I'm gonna use a wide stop loss, you know, just to make sure that I'm not getting kicked out at the worst timing here. And I'm quite positive for all of that. I think we still have some downside to come. We are still bearish, guys. All right, we're not bullish yet, but starting to buy the dip is good. And if things turn well, accumulating a bit higher is, I think, a good thing as well. So for all of those who are long Alibaba or Tencent, I think the worst is almost behind us and that better days are about to come. So that's it for me. I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button so you're going to be the first to know when I upload anything new. And stay close to shore. I'll see you guys.